Welcome into this video. I would like to shed light regarding this concept of withholding tax. I know a lot of taxpayers get it complex to navigate through this concept of withholding tax, though it is a very easy concept. The concept and the logic behind withholding tax is where the payer of the person who you have offered services usually deduct 5% of your gross income and remit it to KRA on your behalf. So the amount which you'll be receiving in your account is net of 5%, so you'll be receiving 95% of that income because he have already remitted to the KRA, which is a requirement that he remit to the KRA within a period of 5 days after deducting that amount from you. And after doing that, to notice that that person or that payer or that employer who had given you that authority to offer some services to them, they have remitted that amount to the revenue authority. You usually receive an email in your device telling you that you can get your withholding tax certificate. Now, in most cases which I've experienced for professional and management fees, that withholding certificates or that withheld amount is not the final tax. You need to declare this income when filing your annual income tax or when filing your return at the end of the year, and that is where a lot of people get caught up. By demonstrating this video, I'll be focusing on the income emanating from consulting and professional services, and also interest from treasury bills and board, and also dividends. So this is the schedule showing you different income and the rate which they are charged for both resident and non-resident. In most cases, the non-resident rate is usually higher as compared to the resident rate, which in most cases you get it as 20%. So these are the different rates which are offered. I will not go each by each to save time, but these are the rates which you need to come here and review. So I've decided to use the data in KRA portal so that I don't get into the PowerPoint slide and spend a lot of time showing you a lot of theoretical work. So this is the income. So this income is also subject to some adjustments which were made under the Act introduced by Finance Bill Act 2023, where there was a new section 10 subsection 3 which provided payment that had been made for non-resident person, where withholding tax paid shall not be refundable or available for deduction against income where an audit adjustment has been made in respect to such payment. I think that is self-explanatory. So, but to make the long story short, there is something which I want to demonstrate to you here. First of all, I would like us to talk about the compliancy. So, failure to deduct or withhold or remit to the commissioner is an offense which attracts penalties and interest. But the penalty which is subject to that, to non-compliance, is 5% of the tax due. So, what is tax due? That is the amount of withholding tax which you are supposed to pay. So I can get here into my browser and show you an example of withholding tax certificate to make it more practical so that I don't give you stories. So there is a withholding tax certificate here. So the amount which will be subjected to penalties is this amount, is this 5% of this amount, and 5% of this amount is, so we can take my calculator and take 5% of this amount and see if this individual was given penalty, which amount will they pay? So this is 0.05 multiplied by 1268. So this is an amount of 63.4 shillings. So if it's a huge sum, this is a lot of money to lose if we are filing huge amounts. So let me get back to the document. So withholding tax is not usually a final tax on resident employee. That is what I said. One is required to declare the income of withholding in the withholding tax certificate upon filing of individual tax return and pay the tax due. So that is clearly understood. So there is something which I wanted us to cover here because some people do not know if they have exemption for withholding tax. So to have an exemption for withholding tax, that means that the employer or the payer of the withholding tax is supposed to pay you 100% of your income which you have earned, and is not supposed to deduct the 5%, therefore ending up paying you 95%. So this is where these are some exclusivity for or exemption for paying withholding tax. The first exemption is dividends which have been received by the company resident in Kenya from a local subsidiary, an associate company in which it controls directly or indirectly with more than 0.5% shares in that company. That means they have a voting power in that company and they can influence the decision making of that company. So this is a parent company which owns a subsidiary or an associate, which is more above 12.5%. That means they have power in the voting power and they can influence critical decision in that company. Also, royalties, interest, management fee, professional fee, training fee, consultancy fee, agency, or contractual fees paid by a special economic zone developer. So in that special economic zone developer, operator, or enterprises, in the first 10 years of its establishment to a non-resident person with effect from 1st July 2023. So this applies to non-resident person who offer this service to an enterprise which is operating at a special economic zone, such as areas like Kitengela, which have been established by government as special economic zones, and that establishment has not overrun 10 years of operation. So an non-resident, not a resident, who have offered these services are not subject to withholding tax. Also, for marketing, another exemption is for marketing commission and residual audit fee paid to non-resident agent in respect of export of flowers, fruits, and vegetables. So this technically does not affect resident individuals. So it is affecting non-resident agents. So interest paid to financial institutions stated in the 4th schedule of Income Tax Act. So under the 4th schedule of the Income Tax Act, there are some financial institutions which are exempt to withholding tax for the interest which they pay. So you need to visit that schedule or request for assistance to navigate through that schedule. So you also need to, another exemption is the payment made to tax exempt bodies. So there are some tax exempt bodies which are exempted from withholding tax and are gazetted in the Kenyan Gazette and in the Act. So there is also resident management, professional, training, and contractual fees whose aggregate value is shillings 24,000 and below in a month. So in case you offer a management and or professional or training services where the amount which you earn is below 24,000, you not be eligible for withholding tax or not be deducted withholding tax. So there is also another instance for air travel commission paid by local air operators to non-resident agents. You can see that withholding tax exemption favors more non-resident individual, though they get punished when it comes to withholding tax because they pay more. They pay 20% when you are paying 5%, therefore a saving of 15%. So let's continue, and maybe this explain how withholding tax regime work. I had already explained. So there is another question which arises, and I have answered it. Is withholding tax a final tax? So it is not technically a final tax for most probably for resident individual, but there is some cases where this income can be a final tax. With regard to payment to resident person, withholding tax when it relates to winning and qualifying dividend and interest and dividend and pension is not subject to withholding tax. But in most cases, when it comes to management and professional services, which are more prevalent in Kenya, they are subject to withholding tax, and it is not the final tax. You need to declare it when filing your annual income tax return. So this also explains how you can pay your income tax using the online iTax and generate a slip. Then you can use either bank details or use KRA paybill, but I don't want to dive myself more on the payment method. This is something which you can get so easily. What I want to do is to show you how you will do now this withholding tax adjustment for the year 2026. That is when filing now your return for 2025. So what you need to do, you cannot be able to use the auto-populated ITR method in KRA portal. You need these Excel sheets You also need your P9 form in case you're employed, and you need your withholding tax certificate. So when you get into this sheet, in most cases, this question which asks, do you have any other income other than employment income, is usually a no. Is usually in default, no. But now you need to enter it to add some section here. Let me say yes. When I put yes, there are some additional sheets which will be added here. And in these additional sheets, you get a P&L account, a balance sheet account. That are the most important sheet which you require to do your adjustments. So under the P&L, what you need to do, as we can get back to my withholding tax certificate, which is here, you can notice that the gross amount of transaction amounted to 25,353. 25,353. So it is the gross amount which originated from. So the service was, let me check the service so that we adjust properly. So we will check the service was a consulting service. So in case yours is a consulting service, you come under the Excel sheet and come to where we have commission from consultancy. So it was 353. So as you know now, based on the current tax regulation, this consultancy fee need always to be reported under an ITIM compliant invoice. So when you charge this, when you deliver this service, in order to demand payment, you'll be required to be issuing, or you are required to have issued an ITIM compliant invoice. And in case you have not done so, you need to do manual upload of non-ITIM invoices and receipt in KRA to be able to declare it here and be tax compliant. So from there, in case you have some expenses, those expenses which you'll be deducting here need to be ITIM compliances. In most cases, they'll be operating in expenses in case you are dealing with commission. Any expense which you be inputting here, it needs to be ITIM's compliant expense. So if it is not ITIM's compliant, it will be flagged off and will result to an audit based on the tax compliant 2024. That is the requirement. So after doing that, you need to come under the balance sheet. Let me just demonstrate, though I didn't want to cover this. You just need to come here because in most cases, like there's people who work in this consulting industry, it's very difficult to assess your assets without needing to engage an actuary. So what I usually advise in most cases, we come here, you check for you come here where we have other how do we call them? You come here at the assets. You either input value 1 in any section because all of it will add up to 1, and you come to where we have other liabilities. Where we have other liabilities or other loans, you can put value 1 so that you can be able to submit the sheet, since it's very difficult to estimate your assets. Then you just come here at the last section, and I show you what you need to adjust for withholding tax at the tax computation. Tax computation, what you need to now write off is the withholding tax credit. So withholding tax credit is the amount of 5% which was deducted by your employer or the taxpayer. So where can I get it? I'll get back to you get back to your withholding tax certificate and come here. So it is 1268. So come here back again and input 1268. But now I want you to notice something. You can notice the tax expense is too high because I offer this service and I cannot be able to claim for expenses because I'm disallowed by the new tax regulation of claiming my expense, since they need to be substantiated with the expense which I incurred when generating that income. But it would be so good if you had some receipt which you put aside when offering this service to be able to reduce this tax expense. The filing of returns for withholding tax will not be very easy this year. So this is a prediction. It will not be very easy. It will be so complex because we didn't think that this act, we are not postulated that this act will be passed, which will be required this year. We thought we will win by our politics, but all in all, we were not able to do it. So we need to know how to navigate it. So in case you have any query regarding withholding tax and other concept regarding taxation, that is withholding VAT or VAT return and also income tax return, you can reach me using the contact in the description. Also, you can reach me through my email so that we can have a face-to-face conversation or an online meeting conversation and discuss about these tax compliance matters. So thank you for watching and have a good day ahead.